been something activists have been suggesting for years, a basic income grant. But now, during the COVID-19 crisis, the calls are growing louder. Government acknowledged just yesterday that it was something important to consider. So just how effective will a grant like this be? Sifiso Skenjana is the Chief Economist and Thought Leadership Executive at IQ Business. He joins us now. Sifiso, good evening to you. Thank you for your time tonight. The obvious question we have to start with is whether South Africa, our government at this time, can afford a basic income grant.
Well, it's quite an interesting one, Stephen, and the premise on that specifically is on whether or not a basic income grant can be achieved on a budget neutral basis, and the quick answer is yes. The question of how, I think, is certainly out in terms of the jury's out on that, because the number of metrics that you can work along to ensure that you can achieve a budget neutral, a basic income grant. And I think on the back end of that, I think we're still not asking the right questions around the very need of a UBI or BIG in the context of South Africa, particularly given the benefits that it can have from a human capital point of view. You often hear, I think, a lot of iterations talking around the fact that, no, let's get back into growth first before we think about, socialist-driven agendas. But unfortunately, the investment in human capital, and this is the things that a UBI or BIG can certainly contribute to the context of the African economy, is certainly one of the things that does drive long-term aggregate economic growth.
You talk about budget-neutral basic income grant. You're going to have to explain this to me. It would seem to me that a basic income grant would mean government pays out money. How would it be budget-neutral?
So the number of ways in which this thing can be looked at, Stephen. So if you just look at South Africa in terms of the food poverty line, in South Africa is about 561 rand right now, and so on the top end, in essence, the impact fiscally would be about 222 billion. That will be required for South Africa to achieve a non-conditional basic income grant for the context of the African economy. The question then, when you ask, is saying how, where does that money come from, and how do we achieve that? Certainly, one can be a view around resource allocation and reallocation of those resources to ensure that we are able to achieve that. That number is about 4.1% of our GDP, and so when you look at the context of how much is already being spent on income grants in South Africa, I think it's close to about 150 billion. And so it's actually not too far off around already our spending commitments towards that. And then there are already ancillary investments that we are making towards social projects. And so there are ways in which we can reallocate resources to ensure a budget neutral effect on the basis of the basic income grant for South Africa.
Tell me if I've understood this correctly, because one of the things that people talk about here is that everyone would get the grant. If you're a South African between 18 and 59, you would get the grant. But if you then have another form of income, so even, if you work, if you have investment income, whatever it is, SARS takes the money back, right? So they take the basic income grant back when you pay tax every year or every month. Have I got that right? That would mean you don't just take a figure and then the South African population. It's actually a lot more complex and a lot lower than doing that.
So this is one of the considerations around how the tax considerations, I think, are put in place for how it actually eventually comes to life. And so one of the examples I'll make, for example, is that because we've got a progressive tax system in South Africa, we often look at what is your effective tax rate as well as your marginal tax rate. And so as you earn more, the marginal contributions to your tax contributions start to increase. But that's still your effective tax rate is still lower than your marginal tax rate, and that means embedded already for high income earners in the country, there's a tax concession that's in place. And so what in essence we're talking around is that there are high earners in the context of the economy who are partially beneficiaries of a basic income grant in the way of a tax break that they're getting. And so it's in then how you build that in for the lower income earners in the context of the South African economy. We've heard from the World Bank, for example, that that the existence of a BIG would result in, improved outcomes for 70% of the families in the context of South African economy, and that's really, I think, the points that we should be looking at, because we know that the existence of a BIG improves health outcomes, improves educational attainment outcomes, and these are all the things that are important contributors to how we think about human capital development in the context of the African economy, particularly for long-term sustainable economic growth.
About 15 years ago, Brazil suddenly increased its social grants for children and for people, and as a result of that, their economy was stimulated. It grew very strongly for some time, and then their economy seemed to crash. It's difficult to sort of know why, but would there be a concern that we would need to accept that a basic income grant would, of course, stimulate demand, and basically a lot more people would sell a lot more goods? That's a good thing. But could it also result in just difficulties in the economy further down the line?
Well, I mean, it's the problematic lens that we often look at is around thinking around, problematic opportunities around the BIG. I'll make the example right now is that I'm able to chat to you because, we've got load shedding, but I was able to, get my modem because I've got those resources. And so we are finding, I think, a lot of empirical evidence, particularly for middle income economies like South Africa, that the net benefit of basic income grant is certainly on higher productivity and higher aggregate output, again, premised by some of the models that you see from a Paul Rome, for example, that talks around the things that contribute to long-term aggregate output and the human capital development, productivity gains, as well as the ability to discriminate where you spend your disposable income. I think certainly has particularly positive benefits in the way in which the structure of the economy shapes itself up.
Sifiso Skenjana, really do appreciate the time. Thank you. Chief Economist, Thought Leadership Executive at IQ Business.